unmute you.
Do you know where we lost the connection?
You had just pulled up, I believe, this slide here.
Okay. And so I will touch on this slide 11 again, because this has been an important development over the last month for those of you that missed the conversation that just took place. Slide 11 is looking at those reported imports, exports. Over the last month, I've come to understand through further conversations at the federal level, both in the U.S. and Canada, that rail volumes are now being picked up in these reported import-exports. And so this is no longer going to be considered only just truck traffic going north and south of the border. Any type of rail volumes that cross the border in North Dakota, that train would not have any market reason to stay in North Dakota. It's likely just passing through, but it would be picked up in these volumes as well. So that is a significant change in the way that this is being reported going forward. I'm going to continue to dig into this and see if I can add some more color and details about exactly what's rail, exactly what's trucked, to provide a little bit more clarity on an accounting basis for barrels entering and leaving the North Dakota systems. Slide 12, as I alluded to at the very beginning of the presentation, that important number of roughly 1.41 million barrels per day in production in the U.S. Williston Basin. As we said today, current pipeline capacity is about 1.42 million barrels per day. So we're right at that edge of production meeting that pipeline capacity number. At the same time, we still have roughly 300,000 barrels per day moving out by rail car. And so that plays into the dynamics as well. So again, we're not having barrels stranded in North Dakota. The shippers and the marketers on those systems are still able to move barrels around. It's finding the optimal shipping method for the optimal market that those shippers are looking for. Again, going forward, you'll notice a big chunk of yellow that's been added to this graphic. That is primarily the Liberty pipeline system that was announced last week. The open season began early this week. That's a system that is being proposed for up to 350,000 barrels per day of Bakken and Rockies production to move down to Cushing, Oklahoma. At that point, it would enter the Red Oak pipeline by Phillips 66, which would take that crude oil all the way down to the Gulf Coast, the Corpus Christi, Houston, Beaumont marketplaces. Again, the Gulf Coast being the prime destination for light sweet barrels, having the option either to be refined in that marketplace or be put on ships and exported to global marketplaces. Again, that 350,000 barrels per day that was proposed, that is proposed to be not only for the Bakken, but also Rockies production. And so over the next period of time, during this open season process, that company or companies will see what type of interest there are from shippers, what type of volume allocations, how much of that may be available for Bakken shippers, how much may be available to other Rockies production. So we'll keep a close eye on this, and as information becomes available, I'll let everyone know. As it's been proposed today, that project is slated to be complete, if everything goes well in the open season and on the regulatory side, by the fourth quarter of 2020. So again, we'll keep a close eye on this, and as information is available, I'll certainly keep everyone updated. Now switching gears to the natural gas side of the world, on a percentage overall, at least for the non-confidential wells, 17% has not changed month to month, but there was a 1% shift in where that gas was being flared. We saw some growth in the amount of gas being flared from non-connected wells in the month of September, and a decrease in the amount of gas being flared from connected wells. Slide 14 is just showing some of the history there. I'll breeze past that, and we'll get to slide 15. Again, this is that rate of gas gathering connections out in the field. New wells selling gas in black, and then new wells producing gas in red. And for the month of September, the new wells producing gas did outpace the new wells selling gas. And so that likely was one of the leading causes of that shift in where the gas is being flared. Again, a lot of new wells coming online that didn't have an immediate connection point or sales options into the midstream markets. And then slide 16, this is just an update for my natural gas production forecast with the updated numbers, and then my forecast going forward. Again, my case one, which is in red, showing continued strong growth potential for the region. It's going to be very dependent on pricing and activity levels, but all things right now are pointing to some significant growth, and that new chunk of gas processing capacity in the region is going to be very needed by the industry itself. And then if you look at that red line, it very quickly in the early 2020s starts to outpace even the over BCF a day of new processing capacity that will be coming online. So companies will likely in the next 6 months, 6 to 9 months, need to start making some investment decisions for what that new chunk of processing capacity will look like for slide 17 as we continue to move this forecast forward. You will notice this forecast does now go out an extra 10 years. That's something in the last month I've added. This forecast used to end at 2035. I'm now taking it out to 2045. And so you can see some additional growth over 5 BCF a day expected on that high case scenario for the region. So some significant growth long term, and we're going to continue to see more investments in order to stay on top of this gas capture issue. So with that, I'd be glad to answer any questions.
And I would also ask, I apologize for the system going down, but if somebody had posed a question in the chat prior to the feed ending, if you could repost that in here again. And I believe just really quickly, one was related to the differential and
Okay.
just kind of where we maybe see the differential going in the future, if there's any forecasts there.
Yeah. So I will address, because that is a great question of what. So right now, that $15 discount at Clearbrook, most market analysts that I've been seeing are expecting that as PADD 2 refineries start coming back to normalized run levels, that congestion will start to work its way out. And so maybe in the next month, couple months, things may start to return to either normal or a new normal, and that'll be yet to be determined. But I would suspect that these real deep, severe discounts will likely go away within the next month to 2 months.
Any questions in the room?
Do you know what the latest capacity is of Dakota Access and whether they've gone up to the expanded capacity that they announced?
Yeah, so the question was, what capacity level for Dakota Access? Right now I'm using 570,000 for their capacity in these graphics, and it might work.
Have they reached that?
My understanding is yes. Yeah.
Follow up on the differential was, do you know if that may or may not affect any production, or how that could affect it?
So the question, obviously the price drives activity in North Dakota, so that discount is definitely detrimental to the wellhead pricing in the state. To try and put a number on it for what that may mean for rig activity or well completions, that's real difficult right now, depending upon the longevity of the situation. But it's certainly not helping the current situation, especially with WTI pricing overall on the decline here in the last couple of months.
Last call for any questions on the phone. One more. Luke, could you be a bit more specific? Sorry. He's just wanting maybe an update on the new Phillips pipeline. If you have one.
Well, so that Liberty system and then the Red Oak. So Liberty would be that proposed project to run from the Bakken area down to Cushing, Oklahoma, and then the Red Oak pipeline, which would be the Phillips 66 exclusive system that would run from Cushing down to the Gulf Coast. And so both of those in open season right now. The Red Oak system was proposed at 400,000 barrels per day, so slightly larger. Cushing is an area of congestion in the U.S., and so it doesn't surprise me that system was initially proposed to be slightly larger than the inbound pipeline into Cushing. There are some barrels there in that Cushing market that would likely benefit from extra capacity out of that market.
Do you know which company is going to take the lead on construction?
I don't have any of the details. I would suspect that, again, this is me speculating, but that Bridger would take the Bakken to the Cushing segment, and then Phillips 66, obviously the Red Oak. So, yeah.
think that's it.
Okay, well, thank you.
Thank you.
Thanks, everyone.